Okay, today I wanted to go over a trade that I took today. I'm not going to go over everything about this day. All I need to know is supply zone, demand zone. There was a push up from the demand zone. There was a call that I could have taken here, but I decided not to because the risk to reward ratio between the two values was not good, and VWAP was right there in the way. And as you can see, VWAP did reject the price right here. So I did not want to take it, and so therefore I didn't. But it would have been a very profitable trade to have taken. It, although I don't know. I don't think I would have lasted past this pullback right here. I probably would have sold right at the top of here. So it is what it is. Anyway, I digress. This is a trade that I want to evaluate. So it gets up to the supply zone, and my expectation is for it to turn around and go back down, at least for some time. Um, and not plan this out completely, but the idea was for it to come back down to V1. That's what I thought. That's what I thought it was going to come back to. So let me continue this. Yeah. So there's a trade as I saw it. And I was waiting to purchase because I wanted this this would have been the confirmation candle right here. But this is a precarious situation because of the fact that this candle closed above the zone. So now we can actually evaluate for a call also. So this could have been reversal, or it could have been the zone candle for a call. So here we are. So it's no longer a reversal candle for a put. It's a zone candle for a call. And this is a reversal candle for the call. And this is supposed to be the confirmation candle. So I moved my stop loss button. I moved my stop loss box up to a position where I'm looking for a call. And what I'm wanting is for this confirmation candle to come all the way up here. But it didn't. This thing closed in a doji. Now, normally I would stop evaluating at this time because I don't have confirmation, and it's supposed to be ZRCE, right? But in this case, I was like, this thing shot up. This was a lot of strength in this candle. It's bigger than any other candle on the whole. Maybe it's not bigger than this one, but this one's green too. So it's bigger than any red candle. We got this giant green candle pushing past VWAP from the demand zone and then closing immediately past the supply zone. So I was like, all right then. Since it did not show me a ZRCE to go down, let's look at the ZRCE to go up. But again, like I said, this candle. But I was like, you know what? I'm going to go ahead and accept the next candle as confirmation. If the next candle behaves like a confirmation candle, then I will use the next one as an entry. If it behaves as a proper entry, then I will use it to take a trade. Now I've already got a call loaded because I have a habit of, especially in these situations where it could have gone the other either way. I have a habit of accidentally taking the wrong side of trades. Now, this is important. Confirmation was good. Entry, green, completely green for 5 to 7 seconds. Okay, that is the decision criteria to get into a trade for me. Now, obviously, some leniency can be done for many things. Um, But in this case, leniency was already given for this right here. So I needed this candle, this entry candle to be perfect. And it was. So I placed a trade. Now I did get a little bit of slippage. Um, but that's what happens when you use the that's what happens when you use the buy market button, which is what I'm comfortable with. So if you can imagine right now, I'm not necessarily happy with what's going on. I wanted it to shoot up, but what it's doing is coming back. And this is the criteria. This is the what's the word? The standard. If U price comes back down and closes on the 1 minute um, chart past your stop loss, in which my stop loss is the this white line right here. If it comes down and closes past that stop loss, then the trade is dead and I have to exit. If it does not, the trade is still alive. Now, here's the thing. If it does not, and you get a push, we call that, as my coach calls it, the second chance push. That is it. That is a way to get out at either a small loss or a small gain. So that applies here. So as it starts to push up into that second chance area, my thought this time was not to use the sell market button to get out, but to place a stop that I thought was a reasonable, you know, I thought was a stop that I thought was reasonable, a reasonable loss to take, which I think in this case was something like $20 or something like that. So I placed that stop, and then it shot up more. So I was like, okay, what I'll do is so I placed the stop where I thought it would be cool to, you know, where I thought it would be okay to take a loss. And it would have been a pretty small loss compared to gains that I've made, and it would have been cool. Then we're on to the next thing. But when it shoved up past this caution line, which coincides with this wick here, which I was not considering as part of the take profit, but I should have at least had caution there. Um, but yeah, once it did that, I was like, all right, well, that becomes my new stop loss. So I put a hard stop. I placed a hard stop right there. Then it continued to push up. So I decided to cancel that. And I was getting ready to just take some. But then it shoots completely past my original take profit. So I decided to go ahead and take two off to lock in some profit just in case the price decides to rocket back down on me, which it has done in the past. So here's the thing. I was thinking about holding this to a second take profit, which is that blue line here represents this friction area created by a zone from yesterday. That was my idea. He said, okay, if the price does not close below here, I would hold it until it got up here, or at least closer there. But I have to be honest, I didn't have the stomach for it, so I got up. But it was a really good profit for me. So that's my trade. Thank you for watching.